What is up? What's up, people? How's it going? Ted here, Bodies and Wicks. I'm looking over my computer because I just turned everything on really quick because I just, wanted to talk about some things. We're gonna do the main ones, right? I'm not gonna do any tiny coins or anything like that. We're gonna just talk about Bitcoin and Ethereum. It seems if you're a trader, those are the two best to trade right now, as they both continue to be bullish. And we'll talk about how smart money is affecting each one of the charts as well. So, again, smart money theorist here. If you don't know what that is, um, basically, we don't believe in anything retail. No trend lines, no triangles, no pinnets, no uh, channels, none of that stuff, indicators, none of that stuff is going to give you, it might, it'll give you a sense of help in the beginning of learning, um, but once you learn that there's an algorithm, right? That's what this is based off of. Everything is based off an algorithm. Once you learn that there is an algorithm in these charts, and how that algorithm can help you, and if you can study the algorithm, and that's what I'm here to do, is try to teach you about the algorithm. Then that's what you'll realize that's where the truth lies in all of this. So that's what I'm here to do, and we shall get started. So I look over here to the left, so that's where my computer is, right? Over here to the right, I got another screen that I look at, but we're gonna go to the charts where you're not gonna be able to see my face, so it's not even gonna matter now, is it? Anyways, hopefully you guys have had a good day. Today has been Monday for sure. Yeah, I've been doing a thread on Twitter, trying to, um, kind of post my thoughts about what's going to happen and whatnot. And we are looking at Ethereum right now. I've been looking at Ethereum most of the day. If I am not mistaken, I am still in a trade. Um, on Ethereum. I am. Um, because I have my theory is that Ethereum is going to get to this dotted line right here, this 3237. And the reason my theory is because of that is because, okay, right now, we are in between two 4 hour fair value gaps. If you don't know what a fair value gap is, it is basically if you take basically three continuing candles, right? And I'll show you one right now. Here's a small one right here. This is a 15-minute chart. So if you take a string of three candles, so 1, 2, 3, and there is no wicks or anything like that touching those candles, and you basically have um, I wouldn't say a solid body. I mean, there could be wicks as well, but if there's an opening in between these three candles, that is basically your fair value gap, right? So, and you can do this on any time chart whatsoever, and these fair value gaps are very key. As you can see, this one came down, even though it came down through the 4 hour gap, it stopped it at the 15-minute fair value gap and continue to go up. So they act not only as magnets, but as repellents at the same time. Um, so they're they're key for to watch how price is going to react within them, right? And as you can see, it came up into it. Didn't get one of the things you want to watch is halfway. That's generally the first thing you want to watch is halfway through. If it how to explain it in the most I don't know efficient way I guess is if it's gonna touch the fair value gap or if it's gonna get near the fair value gap and it rejects automatically, then that tells you what kind of chart it's going to be, if it's going to be bearish or bullish. So as you can see, I mean, even though okay, so as you can see, we're going bullish through the 4 hour gap here, right? We're coming up to here. We actually got inside of this chart, right? Fairly, I wouldn't say deep, huge, fairly deep, but we got pretty deep into it. Come back down. We've already been inside this chart, so now we get down to the top of this one. So we reject automatically. So here's bullish, right? We're getting inside this chart, which is also telling you bullish. We've already been inside the 4 hour fair value gap. Say that 20 times fast. Jeez. And we get down to the 15-minute one. Almost touches it. Boom. Rejects it. All right. Still bullish. Comes down and look at this. Halfway through. Rejects it. That's what these are one of the things that I talk about. So halfway through. Rejecting it. Still bullish. All right. And so, but then again, like I said, it also acts as a repellent. So that's why we're watching it right now in this area, because this is the area it's trying to fight through, basically. And I believe it will. So here is the highest height. We have got 2 equal highs here on a 15-minute chart. It falls back. And then creates double lows. This is what kind of scares me. Not really scares me, but I do believe it could possibly, especially the double lows. Look at this. If we take the Fibonacci, right, and this is I put this on a 4 hour last night. And so if you put it at the bottom of the 4 hour here and the top of the 4 hour here, this is what you get. It retraces exactly into 62%. Not once, but twice. And now, why do I have this line going across here? Because once it got this low, below the 50, that was, to me, a liquidity draw, or liquidity line. Also, you have equal lows here. So I should probably be extending this line from this point over. Let me take that off here. If it will just get off. Come on. There we go. All right. I'm going to try to get to this as quick as possible. All right. So as you can see, we have a low here and basically all of this area over here. So people look at this, especially once it bounces off this, they see this over here. They think support. Right? That's exactly what they think. That's not what I thought. So I drew the line over and I said it's going to go down through it. I didn't explain this last night. I talked about Bitcoin last night, but I did have the same kind of principle applied to Bitcoin as well. It was just on a different chart. That's all. As it comes up to inside the 4 hour chart, and I want to say if we get to the hour, I was going to say the bodies are respected within this fair value gap. The bodies do not get outside. It's only the wick, so it's rejected almost immediately. Right, so and then it breaks down to here. Now, why does it break down? Well, first of all, 62% is the golden buying area. This is the smart money buying area. Anything below 62% and generally around 80% of the Fibonacci is your golden buy zone. Why? The best way to explain it, if you want to buy a pair of jeans, do you want it up here at 20% off, or do you want it at 70% off or 80% off? You want it at 80% off. So smart money will usually take the cheaper buy, and they will use the algorithm to find that cheaper buy, or to get the cheaper buy. So it dips down into the discount area. Also in the discount area over here is where you get your first dip area, right? So it comes up, dips, and then goes up. So here you're also creating smart money formations, what we would call PD arrays. premium discount arrays. So you would have order block, which we did produce. Order block would be your last beefy down candle before your next up candle. And boom, what do we have? We have one huge solid red candle right there. Right here and right smack dab in the middle. Look at that big beefy candle. All right, so we're going to take a line and draw all the way across. Forgive me, I'm going to have to move this back over. And so your order block, if it gets any lower than that, then it's usually it's a broken. Change your analyzation of the chart and start thinking bearish. But it did not. Instead, it got inside the bearish order block or bullish order block. Let me make sure. I just like to make sure the coordinates are about the exact same. All right, there we go. And just look at the bodies of it. Just respecting it, wick down into it, came up, and then meaning that once this breaks down, and it breaks down quick past these, this kind of liquidity point. So this liquidity point, meaning that people would see this as support because of equal lows. Not everybody would see it as support, but the algorithm reads it as support, right? So if you see equal lows, think algorithm, think equal support, think this is where people would want to buy. And then it drives through it, right? So what does that do? Is that there is generally pending orders sitting around in these areas in the market. Some being sell stops. So once it pushes through, it automatically triggers a sell, right? So because they think what's going to happen is it's going to start selling, pull back, and then retest it, and then sell again, right? And then they think they caught a winner. And some people usually have a buy limit just above it, with a short stop loss just below it, because they think that this is support, it'll come down, they'll buy into it, it'll bounce off this same line, and then it'll go back up. And what does it do? It takes out both of them, right? It's exactly what it does. And that's how I try to explain it, the easiest, best way to explain it I can. So it goes through the liquidity point, taking out inserting liquidity into the market, basically, with all of those pending limit orders that were around that area, hitting the order block, and then bouncing back up, and then now we have a bearish breaker, bearish mitigation block. Now, why is it a mitigation block? Is because people that went short here, right, once it gets back up to this point, they realize that they can get out now, or they can get out of the sell and buy, or just release the sell, either or, and then that way they don't have to, they mitigate their loss, because somebody that is down here at this point was probably selling. They were probably chasing the sell as it was coming down, right? And as they were chasing the sell, now they're stuck as it came back up. So now it is down below it. Now, especially smart money, they don't think it's going to sell anymore. They know it's going to go back up if they know the algorithm. So they wait for it to come back up, for the mitigation, and then they release their trade, and then they'll buy at the appropriate time, realizing that it is going to go up on them. That's why it's called a mitigation block, and that's how smart money knows what's going basically knows what's going to happen. At least that's what I see. That's what I've been taught is going to happen. So it jumps up into the mitigation block. All the smart money people release all of their trades that they had, if they were short, and because they evidently were wrong, because they now see that it broke through and created that block, and now we're going to see it go back up. So now it breaks back down, and of course they want to see it get down to the golden pocket, and that's why they were short in the first place, because they wanted to see it get down to the golden pocket. So now that it got down into the golden pocket, they can buy anyway, because now they're at discount point from the high, right? So now that they have bought, it continues to go up, and not only does it go up, but it goes up with force. It goes up with force for a reason, because we've already been through it. Look at this, just stabs right down through it in the 1 hour chart. So it almost like it clears the whole fair value gap of any kind of liquidity that could be resting in it, and so it just drives right through it now, because now there's nobody with any kind of pending orders or anything like that within this area. So now it just drives right up through it, and it gets to, again, the next fair value gap. And this one again being a 4 hour fair value gap. So it gets up here, and now I've created a third high, and then once it creates a third high, what I found was interesting is I haven't marked this, and I thought this was going to happen. It comes right back down into the fair value gap, exactly halfway through, right? That's in just like it did back here, right? It's what we call consequent encroachment, right? So pulls back up, because it again rejected, because we are still in a bullish chart after all of this being said down here. What does it do? And it reaches up, grabs liquidity, right? So now the same thing, the equal lows that are happening here that I was talking about, people having those pending market or pending limits, pending stop or sell stop orders, same as happening up here. Now you have pending sell limits and pending buy stops instead. So now people have buy stops setting up here, thinking that as soon as it buys above it, it's going to retest and then bounce back up, and they've caught a breakout, or that they have a sell limit here with a very short stop loss generally, that because they think that since this is the resistance line, nothing can pass the resistance line, right? Nothing can get through that line. It is rock solid. That is why it is resistance. So what does it do? It does exactly what you would think, or what retail would think it wouldn't do. It breaks right through it. Triggers both ends of the market, triggers the buy stops and takes them out, because it pulls them back, right? It takes out their sell stops. Also, it triggers the sell limits, possibly taking out their sell limits as well, depending on how close or how short they had their stop losses. And a lot of people want to try to be the hero and only have like a 4 or 5 pip stop loss, or whatever it is. In this case, maybe a $1 stop loss on Ethereum, which is almost impossible. So and this is why I always give quite a bit of room for stop losses. I'll usually give two swings for stop loss. So if I'm, it's but let's just say if I'm even buying at, if I'm buying right here, my stop loss is going to be down here. Why? Because we have one swing here, one swing here. And if you don't have enough money, if that's too much money for you to be trading, um, then you shouldn't be trading with that much money. You should be trading with less money. Even if it's a point zero 0.01 on a future, a point zero 0.01 lot or a point zero zero 0.001 lot, even if it's just that much, and then you're only making pennies and cents, um, you know, let it be. As long as you can have a stop loss that's going to be that low, because you don't want it to break through and then all of a sudden bust down negative and then go all the way down here and get below this, and then now you're knocked out, and you're knocked out with $10,000 and you can't trade anymore, just because your retail theory went completely wrong, as retail theory usually does. So instead, it reaches up, grabs the liquidity, pulls it back, and now we see it coming back up into the fair value gap. Now, whenever you see this happen, this usually means it's fighting through. It's going to continue to go up. We're going to continue to see bullish movement out of Bitcoin. And that's why I think the next goal, or the next, I think it's going to reach here, this 3239 area, and then spike through probably a little bit, and then probably have a little bit of a pullback after that. Now, why am I calling that area? Because on the 1 hour chart, if we go all the way back over here to where the 4 hour fair value gap started, this is where the 1 hour fair value gap starts. So we go from here to here, and let's magneto that. And now here is our 1 hour fair value gap. So again, your fair value gaps are your magnets, but they're also retractors as well. So that's why I think once it gets up to this point here, it will probably poke its head in, but then also then all of a sudden just start retracing as well, because we will see it get inside of that 1 hour fair value gap, and now we have two fair value gaps to fight, basically. But technically kind of just one, because we're going to make it halfway through this 4 hour fair value gap. If we're not already, we're probably close. Let me actually do no, we're not close just yet. But I bet we're getting close. Let me see, what is the price here? On 31372 31256. This is 332506. This is 332549. Close enough. So yeah, this is around about in the middle. So so we're not to the middle just yet. So middle, you would also see a retraction, generally, if it's gonna spike up into it. So and that's another reason why I think we're gonna see a little bit of a retraction once we get into this area, this 1 hour fair value gap, because we're also gonna get to about the midpoint of the 4 hour fair value gap. Just above the midpoint is the 1 hour. So I think we're gonna see something along those lines coming up into it. really quick, and then pulling back out, um, and then we're probably gonna see more of the same. A lot of this uh, kind of movement, and I think this will probably be, well, maybe, yeah, it'll probably be a little bit up here. Maybe will be the next resistance area that we're gonna see, and then we'll see it play games, just like we're seeing this, do the same thing, and playing games as well. Um, but yeah, that's what I think of Bitcoin, and I think that's what's gonna happen. Or not Bitcoin, sorry, Ethereum. Um, that's that's what I think is going to happen. And yes, I'm in a long. That's the reason. Um, I wanted to check it out. I actually had my entrance at the beginning of at the opening of the fair value gap down here. So whenever actually I was scalping along the way whenever it was going up. Um, I just kept watching it, and I can kind of figure out whenever it rebalances, when to buy, if it's gonna jump up, when to get out. So I think I had about 4 or 5 scalps along the way, and then I realized it's probably gonna drop soon, especially after I want to say it was probably this one, whenever, because I think it was this one, it kind of ran up really high, really quick. And I was like, okay, that was a little bit unnormal because it just kind of, it was almost like a revved up engine, because most of it was almost the whole time it was just kind of going back and forth, up and down a little bit, and then all of a sudden it just took off. I remember it just taking off. It got up to well, it hit I want to say 3190 first, and then pulled back, and that's when it kind of just laid here for a while, and then it revved up again, and then went up again, and after that second one, that's when I was like, okay, it's gonna fall. So I took the scalp after that, and then set my limit down here at the entrance of the 4 hour gap, and then boom, and I've just let it ride since. Um, and now I'm waiting for it to get to that area that I have talked about, um, which will be the 1 hour fair value gap. Wait, did I move the? I did. I was going to say that doesn't that the dotted line wasn't like that before. It's because I accidentally moved it. There we go. Okay. See, as you can see here, there was no fair value gap. That's why there was really no struggle or anything like that. There was one here. I think this is an hourly one. Or no, this is the 4 hour one, of course. Um, and then we don't really have one. Well, we have one right here, but this one will be a little bit interesting as well, because whenever it came back up into it again, it acts as a magnet, acts as a retractor. So sucks it back up, and this is probably about halfway through. You know how we just saw the halfway through point with the last one? I'm willing to bet this is almost exactly halfway through. You know what? I probably should have got. Let me just delete that. Yep. We are right about halfway through. If not, just a little bit more. So, again, that's about normal. Sucks up into it, usually about halfway through, if not just a little bit less, and then pushes out. If it's pushing up even further, if it closes it, then it's gonna be a different game. If it closes it up, then you'll probably see it retract a little bit and then start going up. That's what you usually see when it happens, when it closes up these things. If it doesn't close it up and usually gets halfway or less, maybe a little bit further, maybe no less than 3/4, that's when you're going to see it go back. That's when you're going to see the other way, depending on which side of the fair value gap that you are on. So, um, I'm just trying to delete this. Jeez, come on. All right, so that's what's going on with Ethereum. All right, just wanted to throw that out there, and that's why I also have all these drawn out through here. So, as you can see, I have tons of these fair value gaps drawn out. And look, here you go. There's another one. Probably came a little bit about halfway through. Or this is the bottom one here. So I'm talking about. Let's just measure it, just to be just to see how it turns out. A little bit more than halfway through, boom, takes off the other way. But what does it do? Gets right into another fair value gap, not too far into it, boom, rejects, and then just goes right through it. So again, it's usually always the first reaction that's gonna give you what you want, and then once it comes down through, now you can see that since this is the one that created it, and then this is the one that's rejected it. This has rejected it 3 times, came down through. Now this is balanced, right? Now that it's balanced, boom, we're up, and then we're up into the next one. And this one just didn't give two craps where it went. I mean, yeah, it did, because look, now you have, and I forgot, I think this one may be a different fair value gap. This was the one out. Oh, what's this fair value gap? One out. Is that this one? Oh, that's a 5-minute one. How is that a 5-minute fair value gap? I would like to know. Now I have no idea where I am on the chart. This is always the fun game. Where are we at on the chart? Especially in a 5-minute chart. I don't even know if it'll go back that far, to be honest. Hmm. Oh yeah, this was when I think I put something on trading view, thinking that it would. I mean, look at exactly, almost to a T. Um, no, I didn't mean to move that. Yeah, I don't think it's gonna go back that far. Anyways, that was fun. All right, so let's get back to the hour and get back to what we were talking about anyway. But anyways, the whole point of that was just to show you uh, the power of these fair value gaps, basically, and what they mean, what they can do. Um, and it just, just going all the way back to the beginning. I mean, not even the beginning, but to the bottom, to almost to the bottom of the chart. As you can see, we have a daily fair value gap down here. It actually never reached there. So that is one thing that is somewhat worrisome, because again, these things act as magnets. But it looks like we had uh, a weekly order block, which would definitely probably have way more importance and way more weight, over, as far as blocking price from getting to a daily fair value gap. So That is probably why it never got down there. And as you can see, how price respects it. Didn't, I mean, this one goes through it, right? But that's the only one that does. The rest of them get close, but just they can't get through it. So, and that's the power, and that's the power of order blocks and breaker blocks. So, and it's just been interesting to see how quickly, Ethereum has been able to rise, and even though it made that big drop, it's funny. I was actually, well, I think I think I was in a buy here. Yeah, I would think I was in a buy here, and I was still holding. And I thought I was gonna go, I'll just go through the fair value gap anyway, and then it made the big drop, and I it it had no effect on me whatsoever. I just held on to it until it got up here, and then started scalping even more. So, um, anyways, that's where we're at with Ethereum. Let's run over to Bitcoin. If well, that's not Bitcoin, that is HUT. If you're interested in Bitcoin mining stocks, I would suggest this one, HUT. Is now a high. It has just, I mean, it just got started back in June. So, uh, yeah, it looks like since June, well, yeah, about, let me see here. 316 was the lowest it got, I think. And now it is 697. So, almost 2.5x. So, um, can't complain about that one. So, but anyways, enough about HUT. So I had my own little prediction going what I thought Bitcoin was going to do, and unfortunately I got close, but not close enough. It did get as far down as here, uh, but I thought it was going to pull down further into the golden pocket buy zone, but it didn't. I honestly thought we were going to see a little bit of a slowdown because it had been buying like mad, and it still is. So that's the interesting thing. So right now, right above um, Bitcoin, what we have is a weekly fair value gap, and right below it is a monthly fair value gap. So it has fought through this monthly fair value gap, and also a weekly fair value gap at the same time. Um, so I measure these out all the time. Here's an hour fair value gap just below it. Another reason why I thought I would pull down into here. I thought the hour fair value gap may want to attract the price, but I forget. Larger time frames, trump smaller ones. So, um, and I haven't got as close as, this was, I think, last night, maybe yesterday, maybe Saturday. I can't remember. I think it was yesterday when I was just all over this chart. Um, Trying to figure out what was going to happen next. And, well, here we go. We have a breaker because you have a high, low, higher high. So that causes the bottom, the lowest candle here, to be a breaker, especially if price runs directly through it. And you probably have another one here too, but um, the breakers are actually trump everything They will trump your order blocks. They will trump your fair value gaps. Um, they act as more support resistance than they do, as far as a magnet and a retractor. Um, but it's kind of almost the same thing. As you can see, whenever price, does come down, hit the fair value gap here. Let me pull this over and show you, because I am in the 5-minute chart. You can see as it's making its high, right, coming down, creates the breaker, and then goes into, that's what this little dip is here, barely even dips into the fair value gap, right? And so once it barely dips into the fair value gap, it gets rejected and gets rejected hard. Hold on 1 second. Oh, you know what I'm doing wrong? I know what I'm doing wrong. All right, I do apologize about that. Actually, getting a phone call and I was trying to figure out how to pause it. Um, so, as I was saying, barely gets into the fair value gap, gets rejected, comes back up, bearish break block. These are again, the ones that will, these will be your resistance. Won't be a perfect, straight line resistance, but they will be resistance for sure. So you can see, uh, gets rejected out of that, comes back into, and this is what I was watching. I was watching it come down, and I was honestly, I was looking for it to come down lower than here. This is what I was looking for it to come down lower to, was this 42,500. That's what I was aiming for, because that seemed, well, for one, I don't know why, because now that I look at it, it's kind of dumb, because you would have to get through a pretty big fair value gap and also another bearish order block or bullish order block just to get below that liquidity. So it comes down and it hits this low right here, right? This low right here. And as I saw it hit that low, I looked over to see what was going on over here, and I saw it created equal lows. So I thought, aha, that means more liquidity. That means it is going to eventually come back down and get below it. And I was telling people that if it, the way retail would look at it would be to draw a line from the top of this guy down through here, so something like that, and to see this come out, and then they would think that it would, bounce off the top of this and then go this way, which it actually did, which I'm surprised about. Um, but it didn't exactly hit the line exactly where they thought it would, which means that people were probably thinking it would, and there probably was buy, you know, uh, limits or some kind of order sitting right around here, and it drives through it and probably took out those stop losses as well, before it continued, a bullish or a bullish move. Um, and as it drove up, it did create a bullish order block, which I did point out yesterday. So at the top of here, um, you know, this is where you would have a bullish order block. Your last, like I said, your last beefy candle down before a large up move. That large up move has to break the candle of and close above the candle that makes that last big down move. So there's where you have your bullish order block, right? And even though it comes back down and spikes through it, right? And that little spike leaves a little sell side liquidity point, which leaves the target for it to come back down into as well. It still moves up, came back down, and then moved up again. So here we created another bullish order block, because we have another beefy bullish candle that you know, closed above the bearish candle. So once price comes back down into it, what does it do? Gets rejected. That's what's expected of price. When it gets to these bullish order blocks, they're expected to be rejected. But then what happens once it gets to the bearish breaker? Boom, rejection again. And then that's what sent price down. So, but it did get below those equal lows, as I called. I was saying it was going to get below those equal lows. Not only did it spike down through them, and then possibly, this big spike down through here, and then this big up candle here. It looks like it spiked down and possibly spiked down again. Yeah, before finally coming back up. And that probably got people to chase price. This candle here. And this one right here, this green candle, got people to chase price probably up. But there's one big problem, is that it didn't close below the liquidity. And once it makes these equal lows, it needs to close below that liquidity, right? If it doesn't close below that liquidity, it's going to continue going down until it does. And it did. And went down. It actually hit the 50% of the Fibonacci that I drew. All right. Where was I? Sorry about that, guys. Another phone call. So, oh yeah, it came down here to the 50% of the Fibonacci that I drew. Again, 4 hours, based on 4 hours from this low to this high is how I drew the Fibonacci. Again, I thought I would come down into the golden pocket. I thought I would definitely clear this sell side liquidity, but now that I look at it, what it did do is, even at hitting the 50%, it closed in this fair value gap and hit the bullish order block. So I don't really have to draw a line, because I can come zoom in on this guy. But I probably will draw a bearish order block. So, horizontal ray. Go. Usually, I mean, they can start at the wick, but generally the body is where you're going to see the reaction happen. So, body of the last down candle. I said usually last down beefy candle. Usually this one, but I mean, this is the actual last down candle, before the huge move up, and closes above this. Not only does it close above this, it closes above at this one too, and this one. So this is actually very, 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 very. So there could be technically 3 order blocks in here. You could have one here, which you actually kind of do if you look at it. It's just almost temporary. So you have one there. So as soon as it breaks it, it comes back down. What do you expect it to do whenever you hit the order block? It rejects. And then, but then it comes back down a little bit farther in. And then here again, I always tell people, this is why it's an algorithm. Who would expect to buy it right here as it's coming down? If it's coming down, wouldn't you want it to sell? Wouldn't you think it's going to be, in a bearish area, even though it did, just create a bullish move? It's coming down. You would think, people would want to sell, um, but instead it buys. So, but where does it buy, right? It buys pretty much right at the right in the middle of the fair value gap. Or at least close to it. Dips down. Let me see. I mean, it gets really close, but it dips down in this fair value gap almost halfway, pushes back out, and then as you can see at that point, then it starts to becoming more of a bullish chart. So these are the ways you can tell how to figure out the algorithm, right? It has to do with these fair value gaps, how they enter them, how they exit them. Also, your order blocks, your breaker blocks, things like that. You got to put all of these things together. It's kind of hard to do. It's not easy to explain in one setting. That's why I have multiple videos trying to explain these things. But as you can see, it did jump into the fair value gap that was created almost halfway through, and then continues on, right? So, and then so what I was talking about earlier is, where did it stop? Why did it stop it where it did at the 50%? And why did it stop there? Because of this bullish order block. It wasn't because anything else. So if we go all the way back over here, look, boom. I mean, right on the money. There's no other way to explain that. You can't tell me that there is not an algorithm based in these charts looking at this. That's a bearish order block. What happens whenever price is expected to hit a bearish order block, especially in a bullish order block and a bullish, you know, overall, I should say, overall bullish chart. So overall bullish, meaning, all the way down here, all the way up here. Now, there may have been a pullback happening at the time, but overall, in a bullish chart, whenever you hit a bullish order block, you are going to expect bullish results. So it did get here. It didn't get down to where I thought it was going to. Not the 42,500, unfortunately. It got close, but then at that point it turned around, and then we saw way more bullishness. So that's when and as you can see, now you have, once it started showing bullishness like this, then you have to turn around and look at these highs, right? The highs that it created, along the way down. And you have to start looking at those as liquidity points that it's going to aim for, right? Because again, these are going to be areas where people think that there is going to be resistance. They think this is going to be a resistance. They think this is going to be a resistance. And what's interesting, God dang it. What's interesting, especially with this one, actually both of them, they do the exact same thing. They do a fake out, right? So let me pull the magnet off so I can draw it straight through and show you exactly what I'm talking about. So, boom, it goes up, actually breaks the liquidity. So buy stops resting there, sell limits resting there, right? Triggers both of them, right? So people think that's going to sell. Maybe they have a short stop loss, maybe they don't. Either or triggers a sell, triggers the buy stops. If the buy stops have a short stop loss, sell limits have a short stop loss, boom, takes them both out. Why? Because it goes through it, pulls back, goes up, pulls back, and then finally goes back up again. So that's why I tell everybody whenever you get to these liquidity areas, always watch what's going to happen because it's going to do a game. And that's exactly what it did. Pulled up, pulled down, pulled up, pulled down, and then finally went back up. And then it got to the next area of liquidity. What did it do? Same thing. Boom. Went through it, grabbed that liquidity, or pushed that liquidity, either or, right? Pulled it back down, probably made people chase it, think it was going to sell, considering it was looking like uh, an area of resistance. And then people probably started chasing it, and then it turns around and goes the other way. And now what do you have? You have one more right above that. And that one, people would just probably thought it was going to say, okay, well, now that it's done that twice, it's definitely going to have to sell here now. So there's probably a lot of sell limits right here, or people trying to market sell right here, or market selling up here, thinking, this is the high that it's made, and this is the resistance. No, smart money is going to take you for a ride. It's going to take it right through it and make you lose that money if you're going to try to fight against it. So, and that's what it did. It went right through it and kept pushing up. So I'm saying these resistance points, or these support points that people always get faked out on them because they don't understand the narrative behind them. They don't understand the liquidity that is there, that is causing the charts to act the way that they're going to act. Because if it was actual resistance, it would sell right there. If this was actual resistance, it would sell right there. But it's not. It's not about resistance and it actually being a resistance point. It's about liquidity and the algorithm trying to trigger liquidity into the market. That is 100% what the algorithm is about. And that's what it did with each one of these going up. So at all these points that I pointed to, this one, this one, this one, liquidity triggered, liquidity triggered, liquidity triggered, and then probably taking lots of money from people that were trying to sell, thinking it was going to be an easy sell off. And then nope. And what does it do once it gets up here and creates two equal highs? All right, well, I'll give it that one because at the second one, it did sell off. Yeah, that's the thing, is that every once in a while, smart money is going to give you an easy one. It's going to give you an easy one that's, that you're going to, they're going to let you win. So they gave him one. So it reaches equal highs. Retailers go for the sell. It sells. It's at a really odd spot, which is why I wasn't taking chances here. But once I saw that it did come down and reach into the fair value gap, that's when I knew it was time to buy. Because again, when you're in a bullish market and come down into a fair value gap from the top side, and it only reaches in just a little bit, it didn't have to go halfway through. It could have went halfway through. If it went halfway through, it would have been fine with that too. but it just barely reaches inside of it and then leaves. And at that point, that's when I knew to go long. And this is when I knew to get out because I didn't want to know what would happen if I stayed in if I had stayed in the trade once it got to the fair value gap. There's the fair value gap again. Not only is it a detractor, but it's a detractor at the same time. So boom in and then boom out. So, and that was a hefty little scalp there. Not gonna lie, I think I got in. I mean, it was coming up, so it was probably somewhere around here. And then I did set my limit at exactly where the entrance was to the fair value gap. So somewhere around here, good 3% move. I'm not going to say the dollar amount, but it was Bitcoin is a pretty good move. From 45,000 to 46.6, can't complain. But now we're stuck in the middle. So now where do we go from here? That is the good question. I see two equal lows right now. And it looks like what's probably going to happen is that you do also have this big area right here. Here, let's just go ahead and stretch this out and look at this. And we magnetize that once into the fair value. You got twice, but it's also coming back down in, but only because it looks like there is equal lows. And we can turn that off now. So equal lows, I'm going to say it's probably going to shoot right through here. Probably almost get to the middle and then be bullish. Or it could just tap the top of it and then be bullish. Either way, I'm watching Bitcoin right now because I think this is the one to watch because this is going to be the next entry. And I'm trying to figure out if it's going to be right now or in just a little bit. But it's looking like it might be right now. I might just enter a little bit right now and wait. Okay. I did have to do it. I did have to enter the very small amount, and I'm just gonna have to wait. But either or, what is probably going to happen, and also as you can see, not only did it enter the fair value gap, but it also hit the 127% extension. So having your having your Fibonacci's placed in the correct spot are going to be key as well. So again, 4-hour low is here, and again, people always ask, well, why here and not down here? Well, it's because this was the last low before breaking the high, right? So this low didn't break this high, right? Did it? This one right here, this one came up. It didn't break this high. It was this one that did. So this low came down, right? And then after all of this, I mean, you can argue that no, it didn't break that high, but it was part of the start of the, I guess you could say, the chart apparatus that did break the high. Um, and that's why it's there and not anywhere else. Um, and then, of course, up at the top, and then so it reaches exactly. And then and I think yesterday, whenever I was putting my fibs, if you watched the video from yesterday, and I was putting my fibs, I was going back and forth where to place them because I wanted there to be confluence in between either the 50 being right here or the 27 being near this line. I wanted there to be confluence. I didn't want there to be 27 here and 50 here because then it wouldn't make sense for me. Uh, there had to be a reason, you know, that I wasn't looking for a reason, to place the fib, there. But then again, I was. I was trying to make sure that there was a reason for confluence. And to me, it made the most sense to place the fib there and there. And the 27 just happened to lay it right on top of the fair value gap. And I said, that's probably perfect. I said, that's probably right where it's going to reach them. And if you watch my video from yesterday, you will see that. So, uh, and it looks like it's reaching down into here. So, looks like we could see it actually break these low level liquidities, probably hit the middle here, and then turn around and go back out. But unfortunately, I'm going to have to leave you with mystery because I have to get off of here. And but I will see you guys later. But if you think you learned something today and enjoyed the video, what I would like you to do is go ahead, hit that subscribe button, hit the like button. Let me know that you did learn something new. What did you learn? Anything that could have helped you with your trading. I hope I was able to help with your trading by making this video. That's what my goal is. And to trying to get people out of this thinking of retail and into thinking of smart money. Now, there's a lot more to smart money than just this, but this is just the start of it. These fair value gaps, these equal lows, the liquidity areas. This is just the start of it. Um, there's a lot more to it than this, and all whatever of my quick analysis series has been just surface area stuff. So I will get deeper and I will show more, but I want people to try to understand at least fair value gaps, what breaker blocks are, mitigation blocks are, order blocks, things like that, before I go on and try to teach something even harder to understand. So, with that being said, I will be getting out of here, and thank you very much for watching. And as always, make sure to keep wearing your pants.